Hello and welcome to another update video on technical analysis. And today in this tutorial we want to talk about wedge patterns again, but we talk about wedge patterns as continuation patterns. So in yesterday's video we talked about wedge patterns as, ascending and descending wedges as reversal patterns, but they can also take place as continuation patterns. So basically what I did say yesterday is that we showed you a descending wedge as a trend reversal pattern from a bearish trend to a bullish trend, and a ascending wedge as a reversal pattern from an uptrend to a downtrend. So basically what usually takes place, and it's never guaranteed in these markets, but most of the time what plays out is that a descending wedge, after a descending wedge, a breakout to the upside happens. They are quite reliable, but it doesn't always need to happen. So breakout traders, for example, always wait for the breakout and potentially a retest before they do a trade, because amateur traders, they oftentimes trade before the breakout and then they lose money because they can't really sit on their hands. But what essentially I can show you here is again another example of a descending wedge, but as a trend continuation pattern. So descending wedge, again, yesterday I showed it to you as a basically bullish signal, a bullish pattern, because we had a downtrend from up here, and then we had a descending wedge, and then we also broke to the upside, but that was as a trend reversal pattern because we were coming from somewhere up here, yeah. Now we are coming from the downside and we have a descending wedge, and then we move to the upside. So again, bullish move, but it happens not as a reversal pattern, but instead it happens as a continuation pattern. So that happens, and sometimes it's referred to as a flag. And yeah, sometimes people refer to it as a flag. A flag can also be something different. A flag can also be a just a channel, but this is of course a descending wedge that you can see. And basically again, what happens here and why it's called a flag sometimes is you have a flagpole coming up here. People refer to this as a flagpole, a strong move to the upside, and then you have the flag. You can clearly see that in this case as a shape of a descending wedge. And then especially, when it happens in a strong uptrend already, it's a very strong signal that there could be another uptrend following after that. You always have in financial markets, and this is, for any market, you have these waves. So this is a clear uptrending wave. Now you have a consolidation, a temporary pause of that uptrend. That is natural. You always have these trending moves and then a pause, another trending move, a pause, a trending move. And what you can clearly see is that these trending moves are always stronger because we are in an uptrend. They're always stronger than the pauses. Yeah, so there is a little bit of a consolidation, but in that consolidation what happens is that the sellers, again, they can't really push the price lower. So you have basically that higher line, the resistance line, is at a steeper angle than the lower line. These are converging lines. They lead to an apex, and at the latest point at the apex, normally sometimes something happens, but oftentimes before that. And we can see here that there was a breakout here. And again, I did show you that before. What you have here is a few touches. Yeah, we were getting very close to that price. We couldn't really get away from it anymore. And then we had the breakout happen. And basically whatever happens, whenever you see a wedge in any shape or form, just try to understand the context. In this case, the context is it's a flag pattern, a bullish signal because it's a descending wedge. And it gives you a heads up that at some point a breakout will be coming. And again, that could also be to the downside, but with a descending wedge, it's very unlikely. Again, it's never guaranteed, but always use, for example, moving averages as well as support, just to understand, are you in an uptrend or a downtrend? And maybe you could use moving averages from a higher time frame, and also use price action as well. So try to understand, how strong is, for example, a rejection down here. Here, for example, there was a first heads up. We tried to break to the downside. You can see that here with this lower shadow, but there was a strong rejection by buyers. So that indicates it's one of the first heads ups that you could get to that help you to understand there could be a breakout coming to the upside. And then you have the pattern, a descending wedge, and then you were coming from a strong uptrending move anyway. So a very clear indication that there could be a trend, a move to the upside coming. And that's basically it. That is what a wedge could look like as a trend continuation pattern. And you have something similar down here, move to the upside. There you go. You can connect. Whoops. Just 1 second. You need to connect. You can connect a few of these closing, and there you go. There you are. You've got the next. This is actually more than like a triangle, because this lower line isn't actually going down, and I will cover triangles in another video. And however, after a while, these get very easy to spot. So yeah, in this case, these wedges can also work as continuation patterns. And again, descending wedges are normally a bullish signal, and ascending wedges are a bearish signal. And it of course works the other way around. When you come from the upside with a downtrend and then you have an ascending wedge, this is also an indication that there could be a trend continuation following to the downside. All right, so hopefully that was helpful. If you liked it, please smash the like button. And if you want to follow me on this trading analysis journey, technical analysis journey, then please subscribe. Thanks a lot for watching, and see you in the next video. Bye.